Hey guys, welcome back. It sure felt like this morning that August was going to start off just like we had in July. Because at the opening bell this morning, we saw Micron and SanDisk immediately gap down. In fact, Micron gapped down about 5%, almost $50 in the first 5 minutes. And I had a pit in my stomach. I thought, here we go again. We just left that terrible month behind us. August can't be like this. And then we saw the institutional support step in. It rallied Micron back up. We grew back up over $50 in the next couple hours. It got Micron back up in the green by the end of the day. SanDisk finished over 6% today at $1,289 a share. Phenomenal day for SanDisk as well, because they also gapped down immediately. So if you take a step back and you look at what institutional support did today, it wasn't just the memory players. We saw capital rotate back into memory, networking, optical, compute, across the entire AI hardware stack. It was clear today that capital was rotating back in. Certainly had some macro headwinds kind of get lessened today too that helped that. But the optical players, remember last night in my video, I talked about the new emerging bottleneck that Lumentum CEO outlined around INP and how that bottleneck, in his opinion, is going to be even bigger than the constraint that we see with memory. Well, it sure looked like the market was listening to his speech that he gave at the Rise Summit in Paris over the weekend, because we saw Lumentum and Coherent both rally over 9% today. Applied Optoelectronics was up over almost 17% today. And Corning, it rallied up 6%. Those stocks were pushed down and suppressed so much in July. They were undervalued, and that was my point last night. And we saw the market rally them back up and move them back into position, honestly, where they should be based on the value they provide to the market. So it was clear today across the entire hardware stack, the institutional money was rotating back in, and they were clearly starting to separate the real supply and demand fundamentals from the headline panic. Because we did have headline panic. As I mentioned, the KOSPI overnight was just a brutal bloodbath. And I thought that momentum that we saw, that negative momentum that drove Samsung and SK Hynix down significantly on Monday in their market, was going to carry across the Pacific and just impact our markets, because these two markets have been so intertwined. But it wasn't today. We saw a decoupling today. We saw the U.S. market grow across the board, while the KOSPI was down, I think, by 5% today. So let's talk a little bit about why we didn't see that type of liquidation in today's market, why the South Korean index didn't influence the U.S. market today. I want to talk about the mechanics that are impacting that are causing that bit of separation right now. And then I also want to dive into just Micron's reversal. Let's take a look at how it looked at the gap down and how it rallied back up and where it's sitting today in the after hours. I want to talk about two massive signals that are coming from Amazon as well as Tesla. Guys, that I think, to me, just tells us everything we need to know about the trajectory of this sector, where we're moving in the forward, and the massive amount of demand that is going to be continued, that is going to just continue to outstrip supply in the market. And finally, I'll end the video with an earnings outlook tomorrow, what we should look for, what we should be listening for with AMD, Arista Networks, Astera Labs, and then I'll give you my playbook on the day, the traditional green, yellow, and red signals across the day, and we'll wrap up the video. So lots to cover, but if you haven't done it already, make sure you hit like, make sure you subscribe to the channel. Guys, let's keep growing Market Signal together. Let's keep this community growing. Let's expand it even greater across YouTube. It is a phenomenal place for us to engage with each other, to share learnings, and just have tremendous camaraderie. So let's keep it moving together. Let's get this video and get it up over 40,000. We've been trying to get this community up over 40,000 for the last few videos. Let's see if we can do it tonight. All right, let's start off and take a look at the KOSPI and exactly what it did today, and why, in my opinion, we're not seeing these, our markets so intertwined. Because we know in the past couple weeks, if we saw negative momentum like they saw on Monday, you pretty much could expect that we would see that type of performance in our markets as well. So that's what I was fearing at the opening bell this morning when we saw the stocks gap down, because the South Korean index, it fell by 4%. It had the worst month since 2008. And what we saw was both Samsung and SK Hynix were down by 8%, 7%, just drugged the stocks down overall. So this was the performance that they saw on Monday. Their Monday kind of leading into the market. And I thought this would lead into our performance. It had it was a rough trading for the South Korean index, but it didn't have that type of impact on the U.S. This is Micron's 5-minute chart. You can see, and if you take a look at that initial 5 minutes, you see we were down by over 5%. $47 kind of just pushed this stock down right at the opening bell. And look at the volume underneath, significant volume bars, tremendous amount of volume within those first 15 minutes. Look at the RSI, how it got into that point of just being completely oversold for Micron. So what we saw was algorithmic buying, but we also saw institutional players just step in, realizing that this stock is just so undervalued right now for what we saw in July and where it was. I think it got down to about 775 or so in that first initial 5 minutes. Let me see. It closed at 775. It actually hit a low of 770 a share. And then we saw immediate support over the next couple hours. The stock rallied back up over $52 and it closed at 828. And then it got into this sideways movement that you see on your screen here. And this is what many analysts predicted. They thought with the situational awareness kind of unraveled and those positions being moved over to Citadel, that we would see this sideways chop with Micron for a little while. That we would stay in this 820, 830 level and just kind of sit there for a while. And that's certainly what it looked like it did today. It closed about 829, just over 829 a share. We see in the after hours right now, we're rallying a little bit higher. We're about $8 or $9 higher right now. We can show you that in a moment. But overall, across the board for me, I think it was a really positive day. In the after hours, if we jump over to Micron, you can see it was up about 0.8 today, $6.50. What we're seeing right now is it's rallying about another 1%, just under 1%, $7 a share, trading at 836. So let's see if it continues on this sideways chop or if we're going to have some real momentum moving forward, because we have some major catalysts, not only tomorrow, but big catalysts on Wednesday with SanDisk that's dropping their earnings on the street. SanDisk, as I mentioned, it rallied today 6%, $73 on the board, closed just at $1,288 a share. In the after hours, another 2%, $23 on the board. It's about $1,300 a share. Now, today it did get over $1,300. If you look to the right, $1,316 on the day was the intraday high. So these are great signs for SanDisk, moving back in the right direction, kind of positioning himself for a really strong catalyst on Wednesday, because I expect these earnings to be phenomenal when they drop them on the street. And let's see if it can continue to move this stock up towards the 1,500, maybe even beyond, with how quickly SanDisk can move. So that's what I'm hoping for right now. Let's continue to hope that we see strong performance tomorrow as we move into the opening bell on Tuesday. But there are some stories I want to cover. These two stories I want to talk about next are really about the sentiment that we're seeing right now. In my opinion, at least, the sentiment, how it's evolving in Wall Street. The first one here covers around false AI narratives collide with computing wall and an August rebound. So it's by Louis Navellier. And what Louis says is that it's an imperative that we do not listen to the fake news that anonymous short sellers are propagating. The nasty short seller community has been spreading a rumor that Chinese AI will undercut American AI. So OpenAI, Anthropic, and Grok, they'll all be undercut in the upcoming months and years. And he goes on and says, in addition, short sellers have also been spreading rumors that DeepSeek is gearing up to defeat American AI by building this monstrous data center in Mongolia to take on America. And he says, if you remember all the stories related to DeepSeek over a year ago and how Chinese AI was better than ChatGPT, they was just all complete false narratives. So he's saying right now that these anonymous short sellers are putting just false narratives into the marketplace to manipulate the stock and drive down the price action overall. He goes on to mention that he attended a lecture at Stanford University titled The Economies of AI Supercycle. And essentially they pointed out that AI has hit a computing wall until OpenAI, Anthropic, Grok, and other AI software applications can get more computing power. And he gives the example of Microsoft, how it was finally able to get enough access to computing power. And once it did that, it was finally able to monetize its investment in ChatGPT in the second quarter. So essentially, what they're saying is that we need more compute. And ultimately, he goes on to say that he expects August will be a big rebound month for the tech sector, for the memory sector as well, for just the AI trade. for a couple of reasons. One, the exhaustion of mean reversion algorithms. Two, the capitulation implosion of the situational awareness in that hedge fund. And then three, the nasty, unscrupulous short sellers spreading false narratives. The stock market is now grossly oversold, and it is poised for a big rebound. He says the fact that FactSet is forecasting a 38% second quarter earnings growth for the S&P 500 just cannot be ignored. And then there's another article I think that also speaks to the sentiment. It's around how the AI trade has survived its first major stress test. If I go through some of these, you'll see, number one, blow up or just blow back. They talk about the situational awareness collapse and how those assets were halved from 20 billion to 10 million in July. But it didn't kill the AI trade. In fact, what they go on to say is that within days, some of those names that were involved in that unraveling, like CoreWeave and Nebius, as well as NVIDIA and Microsoft, they were bouncing back 7 to 26%. Also says that the AI trade is showing signs that it is active and alive. So earning powers are accelerating. We're seeing with Microsoft, the Azure cloud revenue was up 43% year over year. NVIDIA is still posting 82% earning growth forecasts. And Alphabet, Amazon, and Meta are all still investing heavily in CapEx and the building out the AI infrastructure. So what's the real lesson this article says? The real lesson is that leverage, not AI, was the killer that we saw across July. The funds blow up was a classic case of leverage amplifying volatility, not a repudiation of AI's long-term potential. AI's fundamentals still remain strong. If you look at earnings, revenue, and analyst targets for the leading names, they continue to point up, even after a gut check of over-enthusiastic positioning. And then finally, the market memory is short. Forced selling made headlines, but as the dust settled, buyers stepped in and prices rebound, especially for high-quality AI infrastructure and software names. So the takeaway from this article is the AI trade is not dead. It just survived its first true stress test. The lesson will be when the crowd piles in with leverage, volatility spikes. But the secular AI trade is powered by real earnings, not just narrative. The shakeout cleared the decks for a more sustainable growth. So that's the bit of the sentiment that we're seeing right now in the market, that it's kind of shifting the investing community, shifting the mindset, I would say, of Wall Street overall. And then I want to get to some clear signals today. Like I said, these are the signals, in my opinion, that are going to set the trajectory for the sector. Number one, the first one came from Amazon. It's all around Amazon. The AWS sees record growth driven by AI demand as capacity sells out through 2028. Now, you can go through a few things here. It's based on their CEO, Matt Garman. He had an interview on Bloomberg, and he broke down these core details: that they have broad-based growth beyond the frontier labs, that their $25 billion AI business is shifting toward inference. So Garmin noted that AWS AI business currently operates at a $25 billion revenue run rate. The figure encompasses model training from tech giants, but an increasingly large portion comes from inference. Garmin highlighted that the customer spend is steadily shifting towards inference. That is a great sign for the memory sector. We know as we get into that agentic phase, the demand and the pull on memory is so much higher. It'll also be a significant shift for CPUs, but also for memory as well. If we go down, capacity shortages and a massive $220 billion CapEx he talked about, he mentioned that he confirmed that AWS will continue heavy capital spending next year as well. Great sign for the memory sector that Amazon is going to continue their spend because they are seeing clear signals for monetization. And then we get into the next piece I want to talk about is their custom silicon strategy. So the Trainium and the Gravitron. So $25 billion run rate for AWS chip business stems from renting out capacity powered by its in-house processors rather than selling chips outright. And if I jump over to the next article, this is a key piece because this is the first real strong sentiment that I have seen from Jeff Bezos around AI. He is mentioning how this is going to be their custom silicon, their platform, their chips could very well be the next pillar of growth for Amazon. So Amazon's next killer pillar could be built on a foundation of silicon. This article, as you can see, was in Fortune, but company's chip business is on track to become one of Amazon's most durable businesses. A few of our offerings have become durable pillars, says Bezos, and those include Marketplace, Prime, and AWS. What I see right now is our chips business, our silicon business is lining up to be our next pillar, the fourth big pillar in Amazon's business. The comments offer one of Bezos's clearest public endorsements of Amazon's push to design its own chips for artificial intelligence. The company disclosed that for its in-house data center chips, for the first time, they disclosed the revenue for the first time earlier this year. And since then, its Trainium, Gravitron, and Nitro chips have grown to a combined annual run rate of more than $20 billion. Amazon CEO, he repeatedly argued that demand for AI computing will remain strong for years. And then finally, I think that's the last piece, but these are huge signals that we see from Amazon. They are just giving us the sign of a sustained investment and commitment that they will have in this place overall. And when you see Jeff Bezos, when they make it clear that AWS, that's fourth major pillar, that silicon will be the fourth major pillar, and they're scaling past a $25 billion run rate right now, that is a great sign, because what most people don't realize is that custom accelerators, they don't reduce memory. Trainium 3 for Amazon, it packs 144 gigabytes of HBM3 per chip. Furthermore, as AWS workload, as that mix shifts heavily towards inference, data centers require massive arrays of enterprise SSDs to feed real-time models without any input-output stalls. So this is a great signal for the sector. The next signal came from Tesla, as I mentioned, is all around their ramp for robotics. So Tesla mentioned that Optimus production roadmap, their Gen 3 targets of 1 million units a year, and Gen 4 aims for 10 million units. So Tesla Optimus is ramping towards mass production. Management outlined an ambitious trajectory. So Gen 3 targeting, as I mentioned, is 1 million targets a year, and Gen 4 is aspirationally targeting 10 million units a year. Although they did say they will have a flat S-curve initially, due to the fact that they have to build an entirely new supply chain from scratch. But we have seen Elon build a supply chain with Tesla before. If there's anybody that can do it phenomenally well in the market, I do believe that is Elon. This is a massive signal for memory overall, because if we remember what Micron's CEO mentioned, I think it was a month ago, you could see, he said humanoid robots will need 10 times more memory than autonomous vehicles. It will kick off sustained demand wave for the next decade. As you go in here, it says humanoid robots will require 10 times more memory than level 2 autonomous vehicles. Higher autonomous cars are expected to have 300 gigabytes of DRAM per vehicle by 2026. Now, multiply by a factor of 10. That's the memory footprint that Micron envisions for one single humanoid robot. And think about what Tesla just said, 1 million Gen 3 a year, getting to 10 million a year for Gen 4. Guys, that is our huge signal. Should give us massive conviction about the importance for Micron, about the importance for the memory players in the market. So let's wrap up the video. Let's take a look at two things that we need to look for tomorrow. So these are the key earnings, in my opinion, for tomorrow. We have AMD, we have Astera Labs, we have Arista Networks, and we have SpaceX. AMD is going to tell us everything we need to know about compute, right? So we've got to listen for data center revenue growth, MI300 series demand and shipment ramps, gross margins, of course. The commentary we need to hear is just around strong and accelerating demand. Are they gaining share versus NVIDIA? What's that Helios rack look like? How much are they signing new contracts? We want to hear more about the type of commitments that AMD has, and I want to see their guidance for the next quarter as well. We look at Astera Labs. Again, it's a revenue growth and guidance story there as well. Their retimer shipments and growth, their CXL, that fabric, that product revenue and ramp. So we want to see strong demand for those products. Arista Networks, similar story, revenue growth and guidance. The 800G shipment mix, are they moving towards the 1.6 terabit receivers overall? Let's keep our eye out for that piece. What is the demand in the marketplace for that? We're looking at AI cloud networking demand for them. And then SpaceX, probably a little less. I'll listen to that than the other. This is their first earnings since their IPO, but we should look for Starlink subscribers, net adds, Starlink revenue growth and guidance, and kind of the launch cadence overall. And then finally, let's talk about the signal that we saw today, the green lights, yellow lights, and red light across the board. So clearly the CapEx expansion, that commitment from Amazon is a green signal. The Optimus Edge that we're seeing, the humanoid robots, the push to that is clearly a green signal, a future green signal, but is a great sign. And ultimately, may this push the valuation a bit for Micron and the other memory players. And then finally, this institutional overhang that's being cleared, like we mentioned, just getting rid of situational awareness, unraveling all that over to Citadel. Let's see how the stock performs. Yellow lights is the fact that we didn't see the two markets so entwined. We saw the Korean index down on Monday. It didn't carry over to the US. I want to see if that continues moving forward. I'm not ready to put that in a green signal, but let's see if we continue to stay separated in these markets. We know the Korean market has been dealing a lot with leveraged assets, single stock ETFs over there that are just causing havoc in their market. So it's nice to see kind of separation because I think the mechanics are different here in the US. The Citadel short-term catalyst, or Citi short-term catalyst. So Citi removed its 90-day catalyst watch on Micron. They maintained the buy, though, on the stock. They maintained the price target at 1,400, but they did take away the catalyst watch for the stock. They added some other stocks instead. And finally, the next generation, we did see some news out of CXMT, how they're trying to ramp up their LP DDR6, that transition to that. I think that suppressed Micron a bit today. But guys, in reality, when you take a look at it, that fab is far away. And it's also dealing with lower end memory products in smartphones, in PCs. CXMT is nowhere close to challenging Micron, Samsung, or SK Hynix on the high bandwidth memory game. And finally, the red lights will be kind of CXMT mentioning they have another build out. They potentially may build another fab in Beijing. That's what pushed down the South Korean stocks. We're going to keep our eye on that. But I think the US market is kind of positioning that right where it needs to be. CXMT is about 8% of the DRAM market today. Micron's 22% of the DRAM market. So we just need to position this where it is, but it could potentially be a red flag moving forward. And finally, the hardware original equipment maker, the margin squeeze. What we're seeing both with PCs as well as autos now, because Tesla's Q2 auto margins have dropped to about 16%. So there's definitely friction there with the original equipment makers. We're seeing both on auto as well as in PCs. So that's the wrap up today, guys. I hope you enjoyed the video. And I would say, for me, it's clear that the institutional capital is looking past all of the headline noise. They're looking at the signals, and they are once again buying the physical AI infrastructure bottleneck. We saw that capital rotate back into the AI hardware names today. So don't get caught up with the noise. Try to ignore it. Look at the signals. Look at the true demand in the marketplace that I just talked about today. There's so many other stories that I couldn't cover in today's video, but I hope you enjoyed the video overall. Drop a comment below. Let me know what earnings you're watching and what you're focusing on the most. To me, I'm watching AMD. That's probably the one I'm most interested tomorrow, but let me know which one you're most interested as well. Have a great night. I'll see you on the next one.